Welcome back to BestProp4U. Today we're covering gold, which is of course currently holding around the 4,030 mark, above the 4K handle. Importantly, fundamentally, gold has actually taken a massive beating. It's down double digits for the month because this is the 30th of June, let's not forget, and it's heading actually for the fourth consecutive monthly decline. That is probably the steepest drop since Q2 of 2023. We're talking about 13 years, right? Why is that? Well, because energy prices are rising due to the Middle East conflict, completely raising expectations for Federal Reserve rate cuts. In fact, traders are actually pricing in a 65% chance of rate hike in September for the Fed. High interest rates, of course, strengthen the dollar and crush non-yielding assets like gold. Attention, of course, will be this week to the US non-farm payrolls report on Friday, and also tomorrow, Wednesday, remarks by new Fed Chair Kevin Warsh. Geopolitically, we're also monitoring US-Iran diplomacy, though Iran has dismissed reports of talks in Doha. With that heavy macro backdrop, let's jump into the technicals. You see, I've already drawn some levels that we need to pay attention here: 3,870, 4,400, 4,600. Importantly, this is an area of previous rejection of the middle Bollinger Band, as well as this one, which sits currently with the upper Bollinger Band. Something else quite important as well for context, the RSI shows divergence on the daily. I think we identified this potential divergence also in our previous video on gold, perhaps a week or 10 days ago. So we do currently see, important for context as well, that we are holding above the 4K. This is 1, 2, 3, fourth time of the past week or so that we are actually closing above the 4K handle. And this is important for context. What else is important for context, if we look at it, of course, on the daily, right, is that we see that this rejection has actually created some sort of range, right? And going down on the 4-hour chart, this reminds us of a potential double bottom, with the first bottom, of course, over here, the second one flush, sort of down to 3,940 or so over here, and the neckline being at 4,100, which means we have a $150 range of a potential double bottom. And despite, or actually besides, the daily RSI signal, we also have a 4-hour divergence on the RSI over here, which means we have a double divergence, given, of course, we've got this longer term formation as well on the RSI. A double divergence signal is quite important most of the time, rather than not. Now, if we do have a $150 range from bottom to top, this suggests that in case we do actually see this forming and breaking above 4,100, we are looking to duplicate this range, and that would bring us, of course, close to 4,250, which paradoxically, it's the middle Bollinger Band on the daily chart. However, without breaking 4,100, this is not going to be a likely scenario, and we shouldn't expect that, of course, to break. We could go back to the 4,100 and get another rejection, which of course is close to the up Bollinger Band on the 4-hour chart. Okay, and if we do get a rejection here, we could essentially see this turning into a double top instead, and we could go lower, assuming, of course, we'll break below the previous low at 3,950. For now, on the 4-hour, contextually, this is a sort of rejection at the previous open of a 4-hour candle of 4,070. Okay, and we are seeing a hammer candle, it's actually shooting star on the 4-hour. But because we don't have much context here, we're just like trying to come down below the middle Bollinger Band, while at the same time both of Bollinger Bands look like they are squeezing, which suggests, of course, a breakout to the upside or to the downside as a breakdown. Because of that, we're going, of course, to need a little bit more context, and for that reason, I'm going to go down on the 1-hour chart. Now, the 1-hour chart reveals something a little bit more useful on the 1-hour chart, we see a rejection at the upper Bollinger Band. And this is again another shooting star. Now, importantly, this looks like an impulse to the upside with a rejection. The bands are looking flat and not squeezed, which suggests a potential range, which means all the way to the downside at around 4K, just below 4K again. However, it's important here to see whether we indeed break below the 38, the 50, and the 61.8. Where actually we break the 50, this becomes, which is a 4K by the way, a cluster, this becomes more of a case where, you know, the odds of seeing actual a reversal up here all the way down to the bottom Bollinger Band, 3,970, are becoming a bit more, are increasing these odds, okay? But as long as we remain above 4K, this might be an actual opportunity for further upside. And if we do break 4,100, then we could essentially see this double bottom potentially being confirmed. And of course, expect a move at 4,240. But in the very short term, as I was saying, on the 1 hour candle, and given the time that we're currently here, 7 o'clock, UTC +3, we're near the London close. And this could be, this end of hour move to the downside could also suggest that if we do fail to cross above 4,040, once again, we might see this becoming more like a pattern that I like to just give you an idea of what I would call probably like something like the older Twitter logo, because it would look like a hummingbird. So essentially what I'm saying is we could see something like this, okay? And that would be the end of day effect, potentially leading to further downside. That's what I'm saying is quite important actually for context, whether we do break the 50, the 38.2 or the 50 Fibonacci retracement. So this shooting star suggests a short-term pullback might be due, okay? And these are the two very important levels we need to pay attention to, okay? The 50, which is 4K pretty much, and 4,020 to 30.2. Of course, if we lose that, we look at the golden pocket at 3,990. So if the 50 holds, that's a great opportunity to look for a bounce back towards the 4,100 neckline. However, if we do see a break below that fib, then the bullish intraday setup is probably invalidated, and we're likely heading straight back down to retest the 3,970 and then the 940 even perhaps. So trade safe and watch out for Wednesday's Fed comments.